For this sell-off to stop, we'll want to see the Fed reiterate that it's going to cut rates and economic data push back on slowdown concerns. So focus this week is going to be on the Federal Reserve and on economic data. Normally, whenever there's a Fed decision, that's by far the most important event of the week. But these are not normal times, and because of all the tariff volatility and economic uncertainty, the Fed has sort of been relegated a little bit because they're not cutting rates this week. Instead, the Fed will be watched because investors will want to see how many rate cuts they think they can get in 2025. Yes, if the Fed shows more rate cuts than expected, that will be a general positive, but it's not going to end this pullback by itself because the Fed can't do anything about tariff uncertainty or policy volatility. Bottom line, if the Fed is more dovish than expected, that will help the market stabilize, but it's not going to be the event that ends this pullback. Economic data is not pointing to a growth stall, so we have this gap, this dichotomy between sentiment and data. Well, this week, retail sales on Monday are going to tell us if all of a sudden this policy volatility is causing a big drop in consumer spending. Additionally, on Thursday, we're going to get the first data point for the month of March. Again, if we see a big plunge in activity, that's just going to reinforce fears that all of this policy volatility is hurting the economy.